plans. We signed up approximately 70% customers on monthly plans in last quarter. Our sales headcount has gone up by about 53% on year-on-year basis. We have seen our monetization continuously improve significantly on month basis since last November, December. And the same has started showing up in top line sequential growth as well. Our paid campaigns grew by approximately 22,000 count to total of about 484,000 active paid campaigns. Collections stood at about 201 crores during the quarter, witnessing 12.2% sequential growth. Deferred revenue stood at about 353.4 crores, which was up 4.5% sequentially and 15% year on year. Sequential growth in deferred revenue, despite focus on monthly payment plans where upfront collections are typically lower, is encouraging. The realizable value of signups that we did in first quarter stood at about 235 to 240 crores. So realizable value is essentially total money that we expect to receive in 1 year from both upfront and monthly plans that we sold during the last quarter. So this, as I've mentioned earlier, acts as a lead indicator for us to see where our collections and future P&L revenues are headed. Our monthly ECS collections, which is money received from direct bank debits for monthly plans, stood at about 33 crores for June month versus a low of just 13 crores in October 21. The ramp up in sales hiring is yielding good results, and we should see better monetization going forward. Overall, as far as reported P&L is concerned, our sequential top line growth reflects improvement in monetization over last couple of quarters. Margins are currently suppressed because most employee costs hit our P&L immediately. As we see our top line ramp up in coming quarters, we should see margins improving as well. Cash and investments stood at 3,740 crores as on 30th June. Coming to operating highlights, traffic stood at about 148 million unique users for the quarter, growing 19% on a year-on-year basis. 84% of this traffic comes on mobile platforms. Total listings in database stands at now about 32.8 million. In a nutshell, the core business is clearly on a recovery path, and endeavor is to get it back to pre-COVID levels of top line and profitability as soon as possible and grow thereafter. Our new initiatives are getting rolled out to users in a phase-wise manner. Focus there is to get user experience right for these products and broadening coverage in terms of products, services, and geographies. So with this update, we shall now open the floor for questions for further discussion. Thank you.
Thank you very much. We will now begin the question and answer session. To ask a question, please click on the raise hand icon available on the toolbar, or you may click on Q&A icon to raise a hand. The operator will announce your name when it's your turn to ask a question. Please accept the prompt on your screen and unmute your microphone while proceeding with your question. We will wait for a moment while the question queue assembles. The first question is from the line of Vivekanand from Ambit. Please go ahead.
Hi. Hello. Thank you very much for the opportunity. I have a few questions. So, starting with the bookkeeping ones, could you give us a split of the campaigns and revenues by the top 11 cities and others? That's one. And the other bookkeeping question is the ESOP costs in the current quarter appear to be much lower than the run rate that we were seeing in the last 7-8 quarters. So, any thoughts on how we should look at this number going ahead, as well as advertising? Those are my bookkeeping ones. I want to ask a few others after this.
Sure. So Vivek, firstly on campaigns and revenue distribution. So top 11 cities last quarter contributed about 43% to campaigns and about 64% to revenues. this particular distribution for last 2 3 quarters has largely been in this particular range. On ESOP expenses, yes, current quarter ESOP expenses are lower, primarily because the expenses that are getting recognized right now are from tranches that we had allocated almost 2 years ago. There haven't been any substantial ESOP, fresh ESOP allocations in last 1 to 2 years. And the way accounting works is that ESOP expenses tend to be front ended. So, for example, if there is a ESOP scheme which vests at 25% each year, the expense booking in first year is first 25% plus half of second 25% plus one third of third 25% and so on. So by the time you come to third or fourth year of ESOP expense recognition in P&L, they sort of taper down substantially. So going forward, basis whatever fresh ESOP allocations are done, these particular expenses will accordingly go up. On advertising spends, last quarter we spent about 6.5 crores. For the full year, we have budgeted around 60 crores or so. So as we get into future quarters, we could have certain branding, advertising, digital will anyway continue. So there could be quarters where it could be lumpy in nature. Last quarter primarily was almost fully digital in nature.
Okay, this was very useful. Just a couple of additional questions. So on the
Sir, sorry to
graph,
interrupt you. There is a slight disturbance coming from your line.
is it better now? I'm closer to the mic.
So I think it's the airy sound coming from your line.
Okay, fine. I don't know if I'm audible or not, but yeah,
Yes, it's okay. Please go ahead.
yeah, the other question I had is with respect to your traffic and the content enrichment. So it seems that you have added lot of new listings in the current quarter, much more than what we have seen in the past. So if you can just give us some color on whether these new listings are helping you get any visibility or monetization. Is this part of your content enrichment strategy, or was it related to any sort of pent up or catch up as far as COVID is concerned? That's one. Second is on the ANP. You said that most of the ANP was on digital. So I'm guessing that some of the traffic that you got in the previous quarter would include inorganic traffic also. Can you help us understand your traffic better and the trajectory? Thank you.
So firstly on content enrichment, so you're right, we added about 900,000 listings to our database. Uh, as I have mentioned in the past as well, see, India overall has about 70 to 80 million SMEs out there. And we, despite being the largest local search engine, we cover only say 40% of the population at this point of time. In last 3 4 quarters, the addition of fresh listings was relatively lower. There was more focus on enriching content in existing listings. And before that, if you would see, we were adding about a million listings every quarter for a good 8 to 10 quarters. So this particular quarter, again, we have focused on broadening our coverage. And once we add listings, obviously those particular listings start getting prospected by our sales teams, and over time that aids monetization as well. It is difficult to say whether listings that got added this particular quarter are directly aiding monetization. To your other question on advertising spends, so yes, there was some particular paid traffic that came during this particular quarter. So out of about 145 million users, approximately I think around 15% or so would be from paid means, and rest is coming organically.
Great, thank you. I'll come back in the queue.
Thank you.
Thank you. The next question is from the line of Pranav Kshatriya from Edelweiss. Please go ahead.
Yeah, hi. Thanks for the opportunity. My first question is, we've seen a very strong employee addition in this quarter. But if I look at the revenue productivity or the collection productivity, it seems to be significantly lower than what we had pre-COVID level. So should we expect that pre-COVID level productivity to be achieved in next 2 to 3 quarter, or it could take longer, or we should assume lower productivity of this workforce?
Okay, Pranav. So, first of all, we need to understand on which particular metric are we measuring productivity. The two metrics that you mentioned, revenue and collection. So, firstly, coming to revenues of 185 crores. So, 185 crore revenue is getting recognized in P&L from customers whom I had sold in last 3 to 4 quarters when my sales strength was not that higher. So as a result, this particular revenue divided by number of employees will not be the right indicator because this particular revenue is not really the revenue achieved by current sales force. Second, as far as collections are concerned, collections of 200 crores, while they are better than revenues, they are relatively lower currently because a lot of customers are getting signed up on monthly payment plans where upfront collections is lower. The realistic metric which we look at it is, as I mentioned, the realizable value, which is the expected revenue that I expect to get from signups that I did in this particular quarter. It stood at about 235 to 240 crores. So that particular 235 crores is what I will likely get over next 1 year from sales done by my existing sales force in last 1 quarter. So that will be a more relevant metric. Considering we had about, I think, 10,000 odd employees at our peak pre-COVID, and now we have about 10,600 something in sales. So productivity is slightly still lower, but considering additions have happened in last 3 to 4 months, in next 2 to 3 months, these particular employees will likely start getting us even better productivity. For example, against 235 crores of realizable value for the quarter, my exit run rate was about 250 plus. So that way we are on a month-on-month improving trajectory.
Sure. And if I look at the contribution of the monthly payment plan to the revenue, how much will that be?
Contribution of so contribution to
70% you
revenue.
said is the number of customer, right?
70% of customers that I signed up in this particular quarter came on monthly payment plans. If I were to look as distribution of my overall active campaigns of 485,000, there approximately 40% are on monthly plans and 60% on upfront plans. As we keep going into future quarters, that 40% will keep moving up. That 40% was 32% in March quarter, at March quarter end.
Sure. Do you see any challenges in reaching to the pre-COVID margin? I mean, we were consistently 25% plus minus 2% kind of a range. So is that margin possible in next few quarters, or there are certain headwinds to it?
So definitely once we reach that kind of pre-COVID top line, I think we should be reaching those kind of margin levels. Currently margins are lower because there is a sort of mismatch between revenue recognition and salary expenses. So I think once we reach that 230 to 40 crore range, whatever incremental revenues will come in from current levels versus that pre-COVID levels, a good chunk of that should directly flow to EBITDA.
Okay, and should we assume the salary levels, to be higher than what pre-COVID level was, or we can actually go to that level?
Yes, salary levels would be definitely higher. Couple of reasons. One, basis regular increments itself over last 2 years, salary levels have gone up. Second, every state keeps coming up with revised uh, wage levels for either minimum wages or other statutory compliances. So basis that there is obviously an increase in wage levels versus pre-COVID.
Okay, last question from my side. Any comment on, regarding the synergies with the parent and how you are working together, to build any business or, anything that you can tell us?
So as far as synergies with RRVL are concerned, uh, we currently are sort of looking at our business in two buckets. One is the core search business, where the endeavor is to get it back to pre-COVID levels of top line and profitability ASAP, and there is a clear visibility on the same already. And then the second bucket is to add a transactional layer on the local search platform that we have. So on the second side, where there is good expertise of RRVL as well, we are working closely with them. So one of the products, which is a hyperlocal marketplace, we have already rolled out a pilot for users in three cities: Mumbai, Bangalore, Hyderabad, for certain categories such as electronics, mobiles, etc. So we are working very closely with them on those particular projects.
Okay. And do you think that ONDC can be of enabler or a challenge for you in any way?
So once that particular ONDC gets implemented, we'll have to see, since we are just rolling out these transactional services. We'll have to see how it pans out.
That's it from my side. Thank you so much.
Thank you.
Thank you. Next question is from the line of Ankur Jain, individual investor. Please go ahead.
Yeah, hi, good evening, everyone. Thanks for the opportunity. I have two questions. One, even before Reliance Ventures, Reliance Retail came into picture into Just Dial, I've been an investor into Just Dial based on what I was hearing about JD Mart and the B2B transactions thing. I think you just explained that you also look at your business into two buckets. You look at the search, the traditional business, and then the value that you try to derive from those clients that you get through search in your B2B business or something. But it's been at least 7 quarters, if not more, and you've had pilots in three cities you mentioned. It is highly disappointing to note that your investor deck contains no information at all on any of such disclosures on the two segments. Ideally, you are actually looking at two segments. Even as per the accounting standards, you have to be reporting about those two segments. I mean, you may choose to say that no, we don't, but internally, you're very well aware that you have to, but you don't. So, I would like to pick your thoughts on that, because as an individual investor, I find it disheartening. I put in my valuable money into it, a lot of money based on a story, but I don't get to hear an update on that story. That story is in some closed doors. Obviously, not everything can be open, but there is some responsibility that the business has towards the minority shareholder. So that's one. Number two, if I heard correctly, you said your mark to market losses is about 48 CR, if I heard correctly. And also your loss for the quarter is about 48 CR. So if the both the numbers are same, are we saying that we actually did not make any money in this quarter? This was just a break even quarter. So these are the two questions I have. Thank you.
Hi, Ankur. So, quick clarification on the second point first. So, mark-to-market loss during the quarter was about 60 crores, and 48 crores was loss at PAT level. So,
Correct.
excluding other income, the overall profit was about 12 and a half crores.
No, I thought
Now
that
coming,
even the sorry to interrupt you, but even the mark to
yeah, please.
market would be adjusted for tax, no? So that's what I thought.
So mark-to-market would be adjusted for tax, but that tax essentially would be reversal of past gains that we would have recognized.
Right, right, absolutely. So it will be closer to 48 if I look at it, maybe 20 25% tax rate. But anyway, I leave that gap.
Right. So, coming to your first question on regarding looking at the business in two buckets and relevant disclosures for the same. So, firstly, see, JD Mart, the monetization model is subscription-based listings itself. At this point of time, out of the total unique users that we had for last quarter, about 8 to 9% of those particular users came for JD Mart related new pages. Why I'm referring to new pages? Because as part of JD Mart, what we have done is we have essentially brought products on our platform, though listings we already had. Earlier, about 20-22% of our revenues used to come from B2B related categories. At this point of time, for last quarter, that number stood at about 25 and a half, 26%. On JD Mart, the dedicated team which works on monetization for the same is now about 600, 650 people, which previous quarter was about 400 people. So considering JD Mart's particular monetization works as a listing fee itself, and JD Mart products are available on both JD and JD Mart platforms, so that obviously gets recognized as uh, overall revenue. The key is that this particular platform's monetization should aid us with revenue growth, which is happening at this point of time, as can be seen with the sequential growth. As far as the
Yeah, yeah.
transactions
I'm
business
more
is,
no, I'm more worried about the disclosure about it. If you see your stock has taken a beating of more than 50% from its peak, well, in this scenario, every stock has taken a beating, but some have taken more than the others. And you obviously belong to the more category. So there needs to be some introspection and some responsibility shown towards the investors who are not sitting in the boardroom discussing some secretive things. There is so much cash in the balance sheet, and for 8 quarters, we're hearing the same story. So obviously, there needs to be something shared with us.
so you are right, but please understand that as management, we obviously cannot simply control what happens to our stock prices. Yes, operating performance is fully in our hands, which is what we are working on. And I think if we continue to deliver numbers both on top line profitability as well as new initiatives, this particular current gap should ideally get bridged in coming quarters. As far as disclosures etc are concerned, so feedback taken, whatever is relevant which we should disclose, we will continue to do so.
Yeah, so correct. You cannot control the price, but maybe the introspection means that because of your silence, your complete secrecy, if I may use that word, the stock has taken a beating and people are not believing their story any longer. So that's what I meant. And obviously, I'm not asking you to control the price, which you cannot, obviously. Uh, Fair enough. That's all I have.
Sure.
Thank you. The next question is from the line of Naman Jain, individual investor. Please go ahead. Naman
Hello,
Jain,
am
may I
I
request
audible?
you? Yes, now you are.
Yeah. Abhishek, I just wanted to ask a small question as to I saw the uh, pilot launch of JD Shopping, right? Saw that there are three categories broadly where you guys have launched products: mobiles, electronics, and home and kitchen products. So how are we planning to? What are the initial feedbacks, and what is the plan to scale it up? How long are we gonna take?
So Naman, on JD Shopping, as you rightly said, the three particular categories have been launched. At this point of time, vendors are being onboarded in each of these categories. The key USP that we are working right now is that 4-hour delivery, and basis whatever pilot orders we have been receiving, in almost 98-99% of the cases, we are able to achieve the same. uh, Over next 2 to 3 quarters, endeavor is to broaden product selection across other categories and also onboard vendors in other cities as well. So we are already in the process of adding 3 more cities, and on a month-on-month basis. So sometime by the end of this particular fiscal year, the selection catalog and number of cities should be meaningful. The target is to cover almost all metros by then.
Okay. And so on the last call, we discussed about, are we going to give discounts from the cash that we have? And it was clearly mentioned that, we are not in the business of attracting a customer by giving discounts. So now in these categories, categories, I can see there are some discounts offered. So just a clarification, are these from the merchant's ends, or is this our company giving discount on the products?
So whatever discounts that you see in the platform are solely from the merchant's end. While we have a advertising budget, so these days the way you look at advertising is a customer acquisition cost. So in case we think that for certain categories where we have decent margins, we can afford to pass on a part of that margins back to consumers, we would look to do so. The discounts that you see currently at this point of time, they are fully borne by merchants.
Okay, so in that case, then again, two things. When one is that you have, allotted a large advertising budget in this year. So how are we planning to? Are we going to do TV commercials for JD's shopping specifically? Because I understand the core business anyways is doing very well, and we are getting back on track. Since this is a new launch, are we planning to do majority of our spending on this advertising spending?
So advertising budget that I mentioned, majority of that is planned for core business itself. For JD
Okay.
Shopping, the thought process is unless there is a substantial pan-India coverage and cross-category coverage, we would mainly focus on digital advertising because via digital you can target specific categories, specific geographies. Once we have desired user experience in place, etc., then obviously ATL campaigns will follow.
Okay, and what is the targeted or a vision to how much transactions per month do you want to reach in JD Shopping? As in some vision that may help us understand the prospect of the opportunity.
See, this particular segment per se has huge opportunity in terms of there is no pure play 3P marketplace currently. All SMEs dealing in products want online presence to get new customers, etc. So I won't put specific numbers in terms of what the ambitions are. I think on a month-on-month basis, we want to see that we keep improving both the user experience side, fulfillment side, and then over next few quarters, we will see how numbers, etc., pan out.
Okay. So, and just one more thing on this. What is going to be the plan to monetize this? Basically, is this going to be commission based on each product that we are going to make money, or is it going to be a subscription based model? Because from other competitors, I understand it is more of a commission based business.
So at this point of time, we are signing up merchants on a commission-based model itself. Once we have substantial traffic, then other streams of revenue such as advertising, etc., too can form part of revenues in this particular vertical as well.
Okay, so it is not going to be like our core business where we have a monthly plan or something like that. It's not going to be the same for JD Shopping, is it?
No, this will be pure like commission on every transaction.
Order. Okay,
Yeah.
okay. And just one small question on the cash balance that we have. So, what are we planning to do with that? Because obviously it's a large balance that we have. Any plans to distribute it or use it for buybacks or something?
So no such plans at this point of time. We have exciting products in pipeline. We would want to spend on building those particular products, content enrichment, advertising those particular products in future. The good part is we have a core business in place, which is a healthy free cash flow generating business. So we'll see after maybe 12 to 18 months how the situation is. At this point of time, we think our core business itself should be able to fund a good chunk of these particular new initiatives.
Initiatives. Yeah, which is why I'm asking you the question. So if your core business is able to support all these initiatives, why not? Why deploy cash at such lower returns? Why not pass it on to investors or uh, you know do something better of it?
So some of the new projects that we have undertaken tend to be long gestation projects. There could be a situation where we think that an aggressive advertising plan could help us scale exponentially. So we want to be in a situation that we can comfortably take those decisions with the cash on our balance sheet.
Okay, and just one small feedback. So I think it has also got to do with the previous participant who had asked the question. I think what is needed from the company is like you did your pilot launch in 3 cities. If there could be some small press release or something to at least keep the investors updated, because even I had asked in the last call when is the launch going to happen, and when you mentioned in the uh, first half, so the end of the first quarter on, or maybe the beginning of the second quarter, it did happen then, but I had to go to the app and check whether it has been done. A small press release of the updates that are happening in the company would really help keep information flow regularly to the investors.
Sure, definitely we'll do so. In this particular case, simply the thought process was that we launched this particular product with a few sort of vendors onboarded. So we are on a day-to-day basis onboarding more vendors and expanding the catalog. So the thought process was once we reach a certain critical mass such that people are able to search for products in their relevant cities, it would be more prudent at that particular point of time to put out a public disclosure.
Okay, and just one small clarification. So I tried ordering some product from JD Shopping, but a hyper local really I thought was that it should get delivered in about 3 to 4 hours. But to me on the app it showed it will be delivered by 3 p.m. and on the next day. So it's not really hyper local in that sense, right?
Okay, so currently in these particular 3 cities, there are certain pin codes where we are able to achieve that particular 4-hour time frame. There are other pin codes where we are still onboarding vendors. Once we have vendors in each particular category in each particular pin code, ultimately we'll have that 3 to 4 hour delivery in each pin code. The incident that you mentioned is the exact reason that we have not been putting out a public disclosure saying that this is live. So while the platform is live to gather feedback from users who are using it, at the same time there is content expansion that is underway.
Okay, okay. Point taken. Wish you all the very best for the future quarters. Hope we see the operating revenues improving with the bottom line.
Thank you.
Thank you. Next question is from the line of Vivekanand from Ambit. Please go ahead.
Hi, thank you again for the follow-up. Abhishek, can you give us some color on the cash operating cost that you foresee, the inflation that you foresee in fiscal 23 and 24 for the cash operating cost? And secondly, could you comment on the operating margins of the company if you hadn't been investing in these multiple new initiatives? Broad sense is good enough. Thank you.
So firstly, on cash operating cost, uh, 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 escalation in FY23-24, difficult to say. Having said that, I think on the employee expenses, clearly with overall inflation being quite high, 7 to 8% on an overall basis, definitely needs to be rolled out. Uh, Similar could be for other expenses. Uh, on your second query regarding these new initiatives, so new initiatives, about 12 to 13 crores of spends are actually capitalized as assets under development. So since these particular products are still in the building stage, these particular costs don't hit our P&L at this point of time.
That's useful. Could you also comment on what portion of the new initiatives investments are hitting the P&L, or is it entirely going into the assets under development?
So entirely it sits under development for new transaction related initiatives.
Okay, and but the JD Mart costs are in the P&L, right?
Yeah,
Because
they
you
are
have launched
already in
that
the
product.
PN. Yes, they are completely in PNL simply because there the revenue model is listing fee and the product had been obviously launched long time back.
Okay, and just to recount the new initiatives, apart from JD Mart, which is already hitting the P&L because you have launched the product, they would include JD Shopping, JD Experts, and I believe there was some product on the real estate side, right? Am I missing something?
So yeah, primarily these particular products, JD Shopping, JD Expert. So basically, products related transactions form part of shopping, services related transactions form part of experts.
Okay, understood. Thank you, and all the best.
Thank you.
Thank you. Next question is from the line of Vijit Jain from Citi. Please go ahead. Vijit, may I request you to unmute your microphone from your side, please? Vijit, may I request you to unmute your line, please? Due to no response, we move on to the next participant. Next question is from the line of Anmol Garg from Dam Capital. Please go ahead.
Hey, hi Abhishek. Abhishek just had few questions. Firstly, if you can split the advertisement cost during the quarter between the paid campaigns and the brand-related advertisements, that would be great.
So out of the 6.5 crores that we spent, almost about 5.5 to 6 crores went as part of digital initiatives.
Sure. And secondly, if you can also, I mean, give your views that if you are planning to do any acquisition related to in the JD Mart space, particularly to acquire more customers or to have more value-added services.
No, there aren't any such thoughts on acquisition as of now.
Sure. And thirdly, just wanted to ask that largely what will be the average realization of JD Mart right now, and how many will be the paid suppliers in the category? And in continuation with the same, has there been any increase in the customer acquisition cost from right now as compared to a year back? Yeah, that's it from my end.
So average realization for JD Mart or B2B related campaigns would broadly be in the range of about 20,000 rupees per campaign on an annual basis. And regarding your question around customer acquisition cost, so customer acquisition cost currently is would be bit higher versus what it was last year due to higher salary levels. But as and when the current batch of sales team achieves desired productivity, once they get tenured, I think our particular cost of sales will be at par with what it was 1 or 2 years ago.
Sure. And again, if you can also give the paid supplier numbers in JD Mart.
So paid suppliers there broadly would be closer to about, I think, 100,000 or so.
Sure, sure. Thanks, Abhishek. That's it from my end.
Thank you.
Thank you. The next question is from the line of Abhishek Banerjee from ICICI Securities. Please go ahead.
Hello, am I audible?
Yes, sir,
Yes,
you're
please go
audible.
ahead.
Okay. Hi Abhishek. Thanks for the presentation. I'm relatively new to the company, so might have a few basic questions. First of all, I'll start with the ad spends part. So, what did you say you had budgeted for the full year? I missed that number.
About 60 crores.
Okay, 60 crores is full year, and this would include your digital initiatives, which is giving some offers on your JD shopping platform.
No, so this particular 60 crores does not include any customer acquisition cost or advertising spends for new initiatives. So these 60 crores we have at this point of time earmarked for core business itself.
Okay, got it. Fair enough. So now moving to what you spoke about, monthly subscription plans. Would you please explain what is the rationale for it? I mean, did you see any liquidity concerns with your supplier base?
So Abhishek, what typically happens is, so Just Dial sells its listings in two payment plans. Either you could pay upfront or monthly payment plan. So for example, you could either pay a 4,000 rupees down payment and sign a mandate which allows us to charge you 2,000 rupees per month on your bank account, or you could directly pay a say annual subscription of 22,000 rupees. Now, post COVID or during COVID, what has happened is some of the customers might be averse to actually shelling out the entire 22,000 rupees upfront. So we thought that, okay, for us, it is important to sign up customers. Once they sign up, once they taste the services, definitely they would be willing to stick around for a longer period of time. Plus, the ecosystem is also evolving in a manner that everything is being sold on EMI plans, monthly installment plans. So that is what has made us gravitate towards monthly plans, and which so far is working out pretty well.
No, no, absolutely understandable. So you basically saying that for a person who is going with the monthly plan, they are actually paying 28,000 rupees to you in a year. So that's
Yes,
around, yeah, sorry.
over
You
time,
see?
over a period of 9 to 10 months, they would end up paying that particular amount.
Got it. And what is the retention level? I mean, so for a customer who's going with the monthly plan, so what is the average realization you're getting from them in a year?
So average realization that we get from our monthly customer is very similar to what we would get from our upfront customer. So last quarter, whatever we sold on monthly plans, approximately 20,000, 19 and a half, 20,000 annually is likely to be the annual realization. So what happens is, in a monthly plan, my ticket size tends to be slightly higher. So upfront plan might be say 21, 22,000 rupees for the year. But in a monthly payment plan, I am able to get them to sign up at 2,000 rupees a month, which effectively is 24,000 rupees for the year. So even if the
Hmm.
customer does not honor full payment or honors for say 9 to 10 months, I still end up getting 20, 21,000 rupees.
Got it. But I mean, with the time value of money, what does that come to? Is it coming a little lower?
Not really. So, in fact, in this particular case, whatever are our particular monthly plans, they tend to be perpetual in nature. So, they get auto renewed at the end of each year. So, even today, we have certain customers who signed up on monthly payment plans 5 years, 7 years ago. And in fact, there is zero cost of sales in those particular plans. So that time value of money relatively is not a factor, a significant factor in this.
Got it. But okay, so coming from slightly different angle, so what was the annual plan cost? Say a couple of years back, has that increased over years?
Annual, sorry.
So the annual subscription cost that we were talking about, how what has been the inflation in that over the last 3 4 years?
So we during COVID times we had actually rolled out certain discounts to customers. So the first thing that we did in the month of October, November was withdraw all those particular discounts. Our pricing varies by geography, pricing varies by category. Pre-COVID, if you see, our realizations used to be at the peak was about 18,000 rupees uh, per campaign annually. Right now, while the
Okay.
P&L realization would be lower because P&L revenues, as I mentioned, are lower, but the realization that I am getting from customers that I am signing up right now is ballpark in the range of about 19.5, 20,000 rupees. So there has been a about 8 to 10% increase versus my pre-COVID peak levels.
Oh, that's really good to hear actually. But see, the reason why I was asking this is that while on a yearly basis, when you're asked to make a payment, it's actually easier to pass on inflation. Whereas if you're doing it on a monthly basis, because as you're saying, if there's an auto debit, right, and if you need to increase that 2,000 to say 2,500, that would require a customer approval, I'm guessing, which might be a little bit of a question mark, which is what I was trying to understand.
So there also it is not necessary that you need a customer approval, in the sense that yes, you need a customer approval, but it is the but if the limit on the previous mandate is higher, so for example versus a 2,000 rupee per month plan, if the limit set is 3,000 rupees per month, you can actually bill post customers consent for a higher value. And right now also there are 30% customers that come on upfront payment plans. Monthly payment plans are lucrative to get a new customer into the ecosystem. And thereafter, once customers are satisfied with the services, want to take up higher
Okay.
value plans, a good chunk of them want to opt for upfront plans. Their renewals obviously happen with a inflation built in.
Got it. Got it. Understood. Very clear. So, is there any way of passing on this thing to NBFC perhaps? I mean, taking a loan out in that sense. Can you facilitate that, or have you done that in any way?
So we provide various payment modes. For example, payment mode is EMI on your credit card, EMI on your debit card. In fact, those plans work in a manner that customer has to pay on a monthly basis to their respective bank or credit card, whereas we get the money upfront. There, in fact, we incentivize by bearing that particular interest component. So we tell the customer that you will anyway pay 2,000 rupees per month on your credit card, and we are you don't have to pay any extra interest. As just the benefit we get is we get the entire whatever 22,000 rupees, 24,000 rupees less whatever is the interest upfront. So all those particular payment plans are being made available to our customers.
And that is accounted for in the 70% or it's in the 30%?
I count it in 30% because I got the money
Oh,
upfront.
understood. Okay, okay. Okay, sir. That was very helpful. Now, moving to the new initiatives. Will it be possible for you to share any of the take rates for JD Shopping and JD Experts?
So JD shopping take rates broadly should be like it'll be vary by category, but overall should be in the range of I think 7 to 8%, depending on
Okay.
certain categories such as mobile phones could be lower, whereas categories such as apparel, etc., would be higher. And in case in future unbranded products come in, there obviously take rates would be higher. And on the services side, it is typically in the range of around 20% or so.
Got it. So, in terms of services that you are providing, what are the touch points that you're interacting with the customer, right? And what are the touch points or what are the services that you're helping your um, suppliers with?
So while the vendors are onboarded, they are given proper kits, etc., at the time of onboarding. We have also started some bit of training also for these particular vendors. They go through complete SOPs that they need to follow while fulfilling orders that are passed to them. As far as user is concerned, we keep them completely aware of when is the vendor likely to arrive. In case of any delays or any rescheduling, etc., there are particular either that automatically gets done via the app, or there is a team that proactively reaches out and does that. So whatever a user and a vendor need to uh, do or need to be assisted in order to fulfill that particular transaction, either that is done in an automated manner via the platform, or if the automated stuff is not able to assist them, then there is a manual intervention that takes place.
Okay. So this you were obviously talking about JD services, right?
Yes.
So, say vis-a-vis somebody like an urban company, right? I mean, what proportion of the services that an urban company gives would you be offering? The entire suite or 70%, 80% of that?
Proportion in terms of number of services, or how?
No, no. I'm talking about, say, if, say, I want a plumber, right? And if I
Mhm.
am, say, ordering on urban company, vis-a-vis if I am ordering on JD Experts, what what are the services that urban company, will the services of urban company be more than what you are giving, or same?
So in my assessment, services would be almost the same, because there is a standardized tariff card for each particular service. You will be, as a user, informed pre-hand which particular provider will come to fulfill that particular transaction. You will have similar options for payment. The key lies in what other value add services that we can provide. So mainly the idea is that earlier users were calling up these particular professionals, then negotiating a tariff or a rate at their particular doorstep. Now everything is done by a click of a button, with pre-information to both the user and the vendor how much needs to be charged. And once the transaction is concluded, user can pay via cash on the spot or pay online, and all those particular features are in place.
Got it. So how many services do you have on JD Experts right now?
Currently 8 categories are live.
And how many do you foresee in the near term?
So 8 would probably go to around, I think, 10 to 12 categories. We'll keep taking a look basis. The idea will be to sort of master the existing set of categories first.
Got it. And just my last question on JD shopping. You mentioned 7 to 8% take rate. So for that, do you help in order fulfillment in any way?
So we have tied up with third-party logistics service providers. Essentially, we are a marketplace where vendors are listed. The logistics is also third party, and this particular platform connects those particular users with the sellers. So user places an order, seller is informed, seller keeps the product ready. The third-party logistics provider goes and picks up the product and delivers it to the user.
Okay, and the money is held in an escrow
So,
account, and after, yeah,
Yes,
and
money is held in
after,
an escrow account, and once the timeline for returns or refunds are over, then it is released to the merchant.
got it. But you have no
Mr.
problems
Banerjee,
with.
sorry to interrupt you.
Oh,
May
I'm
I
so
please?
sorry. I think, yeah, yeah. That's fine. That's fine. Thank you so much for your time, Abhishek. Really appreciate it.
Thank you so much, sir. The next question is from the line of Arjun Ashar, individual investor. Please go ahead.
I wanted to ask how long will you be in the content enrichment phase?
The line for the participant dropped. We move on to the next participant. The next question is from the line of Swapnil from JM Financial. Please go ahead.
Yeah, hi. Thanks for the opportunity. So, Abhishek, just wanted to understand your strategy change. So, last year, same period, I think we had spent a lot in during the IPL to promote our B2B JD Mart business. This year, we have added, the last 2, 3 quarters, we have significantly ramped up our sales team, and I think basis the numbers that you shared, you have been able to you have seen significant traction in your JD Mart business or the B2B side of it. Will that be fair to say that your sales team is more has been able deliver better results compared to the advertising spends that we did last year?
So Swapnil, the advertising spend that we did almost at the same time, we got hit with the second wave of COVID, which further impacted SMEs across B2C, B2B segments. Uh, Last 2 to 3 quarters, we have spent time in terms of fine-tuning our pricing or sort of withdrawing all sort of discounts, ramping up our sales force. So both B2C and B2B are coming back on track, but with the increasing proportion of B2B and dedicated focus via 600 plus B2B monetization team, definitely these particular categories are giving better revenues.
Okay. And second is a question. So we used to have around 535,000 campaigns pre-COVID. That dropped to around 430,000 sometime in the second quarter last year. Now, out of this mortality that we are seeing, roughly 100,000 odd, how much uh, have we been able to recover back, or how much is pending? Can you give some sense on that?
So currently we are at about 485,000 campaigns. So half of the drop is sort of covered. And endeavor is that we should exit the year at our closer to our peak campaign counts. So last
No,
two
no.
quarters itself, we have added about 45,000 campaigns.
Actually, my question was from the perspective like of the 100 or 1,000 that went out of the system, right? How
Yeah.
many are part of that 45,000 that you added in the last 2 quarters? And what is the potential, uh, uh, recovery that we can think about beyond the new additions that you may have seen?
See, we are dealing with the small and medium businesses where what happens is a particular business might be, or a particular person might be doing a certain XYZ business 2 years ago. Later, they might be doing some other business and they might be advertising with us at both time periods. So we do not directly look at it as, or it is not possible for to look at it as that 100,000 which actually went out or did not renew, how many of them have come back. In any case, in case of Just Dial, even if a customer has not renewed, be it pre-COVID period or current period, whatever it is, it does not mean that the customer has gone away for ever. So the way Just Dial has an advertising budget, for example, FY19 we spent about 60 65 crores. Next year, COVID year, we spent only 6.5 crores. Then again we spent about 65 crores last year. So that will be a sort of similar behavior for SMEs also. Whenever they are comfortable to advertise for their particular business, they would come and see whichever platforms they want to advertise, and there could be periods where they may not want to do so. So the way we evaluate it is what is the total current number of active campaigns that we have.
Okay. And given that we did 20,000, 22,000 additions this quarter, do you think we will be able to sustain such additions in the forthcoming quarters also? Typically, what if I go historically, so one good quarter is followed by some subdued numbers in the following quarters, but it's been two consecutive strong quarters that we have had. How do we think about the forthcoming quarters?
So as I said that last particular quarter, considering exit run rate was better versus full quarter, that sort of gives us assurance that some of these particular trends should keep improving on a month-on-month basis. And if we are thinking that we want to exit the year at peak campaign run rate, then definitely a healthy quarter-on-quarter campaign addition is what we ideally foresee.
Right. And just a last question. So you mentioned 60 crore of budget for core, core business A&P. How can we think about the non core business investments that you're thinking about? Like how much should we factor in, or any sense of guidance on that?
So that I think we are still working out that once these particular products are in a decent stage to be advertised both on digital and subsequently ATL, I think we will have to wait for another probably a quarter or so before we can sort of have some clarity on how much spends we are likely to do on those initiatives.
Okay, cool. Thanks a lot for taking my questions.
Thank you.
Thank you. The next question is from the line of Nyan Thakkar from Ashika Group. Please go ahead.
Hello. Hello.
Go ahead, sir. You are audible.
Yeah. Thank you, sir, for taking my question. Sir, I would like to have some clarification on the plan of parent entity with respect to JD's platform, whether the JD platform will be integrated to the GeoMart or any other application of parent entity.
So, Nyan, yes, there can definitely be synergies or integrations. So, we are sort of in touch with them. For example, on our particular platform, we have already integrated the access for Geo SIM cards. Similarly, Just Dial apps could get integrated with the My Geo application, which already has access to multiple other RIL group applications. So some of those particular integrations are already being discussed.
Sure, sir. Thank you. Sir, you were just explaining us with respect to the logistics third-party delivery partner. So, can we understand, is it like the RIL's logistic company has been used by the Just Dial for providing the services?
No, these are completely whatever third-party services such as Dunzo, Grab, Shipyari, and whatever other logistic service providers that are out there who do e-commerce fulfillments for various companies.
Okay, sure, sir. Thank you so much.
Thank you.
Thank you. Ladies and gentlemen, we'll take the last question from the line of Arjun Ashar, individual investor. Please go ahead.
If I'm audible now, I wanted to know how long will we be in the pilot phase for the first three cities for JD Shopping and JD Experts in terms of content and enrichment, so that we have gone wide as well as deep in various categories of content being listed on the website, on the app.
So in terms of JD Shopping, that went live for users just about, I think, 1 month ago, and we are already in the process of adding more cities. So current quarter, it would get added. As far as experts is concerned, those particular current set of services are already live in about 10 to 11 cities.
No, I'll just illustrate. So for instance, I visit a store like Benzer or Amerson's on JD Shopping. I see only a few categories. Like in Benzer, you just had shopping bags, whereas it's an entire superstore. Or if I look up any local hardware store, when do I reach a stage where I can find at least 100 to 150 SKUs of that hardware store listed on JD Shopping? When do we reach that phase?
So I think it will take around 6 to 9 months for us to reach that particular stage where there is a reasonably broad selection of products and available across all major pin codes and top metros.
And what will be our strategy to funnel users to these listings? Because right now there is no awareness. If I want to buy, say, a doorknob, Many don't know that there is an option like that, and then what happens is that our customers also don't have an incentive to load their entire catalog of inventory on JD Shopping. It becomes a chicken and egg kind of situation. So, what is our strategy to attract users to the website and app?
So, couple of things. One, these particular products and these particular vendors will have access via our particular homepage on existing platforms. So, from the shop online section, users can explore these particular products. Second, there is already a traffic that comes organically searching for these particular listings. So once users come for these particular listings, they get to see that, okay, there are transactions or shopping enabled. Third, there will be dedicated apps also for these particular initiatives. And once we start advertising, that is how users will basically get to know that more users will get to know that these particular optionalities exist, and that is how product will get scaled up.
Okay, and the advertising will be like national campaigns, or there will be again hyper local advertising campaigns like in front storefronts and all that, like how Paytm used to have these stickers on every cashier's desk and all.
So in the first phase, it will be digital in nature because that will help us to target certain geographies, certain categories of products. Once we have a decent selection and more geographies covered, then it will be a ATL campaign. Thereafter, then it can be a mix of hyperlocal marketing. I mean, there will be annual budget, part of which will go towards branding advertising, and part of it will go towards digital, other sorts of hyperlocal advertising.
Sure. All the best for the future.
Thank you.
That's all.
Thank you very much. Ladies and gentlemen, that was the last question. I will now hand the conference over to Mr. Abhishek Bansal for closing comments.
Thank you everyone for joining us. In case you have any further queries, please do reach out. We would do our best to address. That's it from our side. Thank you.
Thank you, sir. Ladies and gentlemen, on behalf of Just Dial Limited, that concludes today's session. Thank you for your participation. You may now click on the exit meeting to disconnect. Thank you.